Bam. Hey guys, today we're gonna talk about Trump, the big beautiful bill, and tariffs, okay, and what it means for us as traders, and what we need to look for in order for us to go from A to B, and how to use and how to make sure that our understanding of the market is solid, so we can take great opportunities with the market. So thank you for coming. My name is Mike. Welcome to the tool, and I'm teaching and I'm helping and I'm trying to encourage people to be more involved in the markets and to be more involved in what we're doing here. So today we're going to talk about the tariffs and other stuff. So let's go to the screen recording and let's see what we can get from there. So okay, let's start. So Trump says US to start sending tariff rates letter to trading partners. Okay, so basically that's what he's saying, and he's actually sending out those letters. So his letters to be sent to countries without a deal in place before the end of 90 days pause on the 9th of July. So the first of all, we need to understand, okay, why is Trump doing all these things? What is he trying to accomplish? And for me, I'm feeling like he's really trying to put power, he's trying to put pressure, he's trying to make sure that he's making money with those tariffs. So you can see that one of the strategy of Donald Trump is actually trying to make money with the tariffs, and we can see we're gonna go through all this stuff that we learned, and we will see how it's actually making sense. So Donald Trump has said in the US will start sending letters to the trading partners, sending out tariff rates that countries will have to pay from the beginning of next month. Okay, so and from the beginning of next month, and the US president also told the media that the 10 or 12 letters will be sent out on Friday, with further letters sent out over the next few days. His administration is expected to write to all of its trading partners without a deal in place before the 9th of July. So, which includes China as well, right? And I think by the 9th of July, so basically he's trying to make money with the tariffs. Okay, that includes China, that includes our idea in regards to trading, and if China's not budging, what can happen, especially with China, that they will also place a massive tariff on the US market, and that could also kind of like hinder the US market's growth. So we just go from one party, Donald Trump trying to use that to boost the economy of the US market. And yeah, so far a full deal has not been made. Okay, then we can see as well Trump I simple tariffs rates over complex talks, says letters going out on Friday. Trump says he could reach a couple of border trade deals. President says he prefers simple approach with clear tariff rates. About 100 countries could see 10% reciprocal rate, and Treasury basement says, right? So basically, that is what is happening with Donald Trump. That is what he's trying to do, all right, with the tariffs. And for me, what was important is like really understanding the whole concept of tariffs, because we keep hearing about tariffs. What is tariffs? What is it all about? Okay. And I decided to watch a little video with you guys so that we all are on the same board, that we all understand what tariffs is all about. Because even if I explain it from my own mouth, is I'm not economics. Okay, I'm not into economics. However, that's a nice explanation I found. Is an 8 minute long video, and let's watch it together so we can stop and pause, and I need to hear your feedback so that we have a good understanding of tariffs, and we need to know how to approach the market and how it could affect the financial market in general. Okay, so yeah, let's have a look.
Before we get into tariffs,
The heart of the Donald Trump economic plan.
we should talk about the chicken war.
The chicken war is a clucking good story.
In post-World War II West Germany, people started eating a lot of chicken, specifically American chicken. Midway through 1962, U.S. farmers were on track to sell more than $50 million worth, $500 million in today's money. This made European farmers mad, so the organization that later became the European Union put a tariff on chicken. A 5-pound chicken that started as $1.60 became $2.25. Imports quickly dropped. U.S. chicken farmers and politicians were furious.
And we thought Germany's our big market for chicken, and so if we hurt the Germans, maybe we'll get them to change their mind on chicken.
So the U.S. put a 25% tariff on trucks, like Germany's Volkswagen. And it worked. Their truck sales in the U.S. fell by half, and they never really recovered. Meanwhile, Germans paid more for their chicken, and Americans had fewer truck options. It's kind of a perfect example of what tariffs do: hurt consumers while protecting very specific industries, or attempt to get countries to change their behavior. While they haven't been a large part of trade policy in decades, former President Donald Trump wants to change that.
Some might say it's economic nationalism. I call it common sense. I call it America first.
President Trump has really sort of brought a lot of people out to think that tariffs might be something that's useful in America's economic arsenal in a way that hasn't been used in the past.
Here's how tariffs work and what Trump's proposals would do. Let's start in 2018, when President Trump put tariffs on
Washing machines, we're going to benefit our consumers, and we're going to create a lot of jobs.
Since then, whenever a washing machine is imported to the U.S., the company on the U.S. side doing the importing pays a tariff to the U.S. government.
Their margins are pretty low. They've got to pass that price on to consumers who ultimately pay it. That's the whole point, in some sense, to reduce demand for those goods and create space for domestic producers.
After the tariffs, not only did the price of imported washing machines go up, so did the ones made in the U.S.
There's this myth out there that if we tax imports, domestic producers won't change their prices. And that's not the case. You're creating more demand for them.
So naturally, the price goes up. And it wasn't just washers. Dryers went up in price too, even though they weren't part of the tariffs.
So usually it's the case, if you buy a washer, you buy a dryer. So even though dryers weren't directly affected by the tariff, they were indirectly affected by the shift in demand.
Now, it wasn't all bad. These tariffs did
Create a lot of jobs.
about 1,800, mostly from those foreign companies like Samsung and LG opening plants in the U.S. And a study found the U.S. collected $82 million annually. But because of those price increases, it cost consumers $1.5 billion more. So they basically paid $815,000 per job.
This is a very expensive job creation program. And so that's another reason why economists don't like tariffs. They're much more cost-effective, more efficient ways of increasing employment in those industries.
These weren't the only tariffs Trump created in 2018. The big ones were on
Steel and
So basically, in regards to the job creation, what needs to happen if the tariffs are set in place, right? And like, I love this example with the washing machine because that's what happened. So in order for us to get a cheap washing machine or a better washing product, we need to import it from a different country. Now, in this case, it could have been China or Germany or whatever, right? So now, as we are importing it, and because of the tariff prices, now the price of the importing the goods itself has now gone up. Now that it's gone up, now it means it's more expensive for people to buy. It is more expensive for the manufacturers to buy. So what, not for the manufacturers, for the consumers to buy, and for those business owners in America to actually buy more washing machine or other particular products, right? Now that it's more expensive, that automatically means that every other industry which is kind of connected to that particular washing machine, they have to pay more as well. Now, in order to reduce price, they now have only two choices: either to keep keep the expenses higher, making sure that it's more, the consumer are paying more for whatever they want, right? Or they have to create jobs, meaning they have to now start another manufacturing, doing more washing machine in-house, in other words, in America, so that they can actually lower the price and then actually sell it to other people, which will be a win-win in a sense for America, because now they don't need to rely on foreign countries to actually produce the goods. They can actually literally produce the goods in-house. That boosts the economy, and that creates more job. And that's the whole idea of it, right? But let's keep listening.
aluminum.
Those were really designed to punish China for its transgressions of international trade rules.
Also for national security. They're used to make a lot of military equipment. but also everyday things like cars.
All the industries that use steel and have to pay the higher price, that squeezes their profit margins, and it also puts them at a competitive disadvantage against foreign producers of those same goods who don't have to pay those inflated costs for their inputs. And so a lot of studies have shown that you lose jobs, as many, if not more jobs, in those downstream industries as you gain in the upstream industries that are being protected by the tariffs.
Many studies on the 2018 tariffs found some pros, some cons. Manufacturing jobs, which were on the decline, didn't increase, but they did level out. The overall economy lost jobs, mostly in those downstream industries, and the costs of the tariffs were passed on to U.S. companies and consumers. So, not great for the economy, but it did motivate U.S. companies to move out of China and made supply chains more resilient. But it didn't change much of China's behavior, and in many ways, they became more aggressive. But here's the thing. Even with all the economic downsides, a review by the Biden administration suggested Trump's tariffs should remain and the administration should add or increase them, which they did.
Once tariffs get in place, there are two factors that sort of keep them in place for some time. First of all, there are going to be domestic interest groups that have a stake in seeing those tariffs maintained because they like the extra market share that they've gained as a result of those tariffs. And second of all, tariffs are a bargaining chip. So why would we sort of unilaterally get rid of these, even if there's some economic benefits, when we might use it in some negotiations down the road?
Tariffs are really hard to remove. It's why, 60 years later, there's still a 25% tariff on trucks, even though U.S. chicken farmers no longer care about selling in Europe.
So we're still living with the legacy of the chicken war. So that's sort of another lesson of history, is you have to be careful about imposing these tariffs because you think you're doing it for short-term strategic reasons or you're just helping out this industry temporarily, but they can last for decade upon decade upon decade.
Tariff policy is kind of old. Even by the chicken war, they were only imposed on around 7% of U.S. imports. Trump's plan for a second term is to bring them back dramatically.
This is the policy that built this country, and this is the policy that will save our country.
He's proposing a 60% tariff on everything from China and a 10 or even 20% on every import from every other country.
Countries are going to finally, after 75 years, pay us back for all that we've done for the world.
Multiple independent studies looked at the possible effects. One found it would cost the average American household $1,700 from higher prices. Another found it could cost more than 684,000 jobs. And they don't factor in how domestic goods might get more expensive or retaliatory tariffs from other countries.
They're not going to take this lying down. They're not going to change their behavior in some way to appease the administration that imposes such tariffs. They're going to retaliate. So not only will U.S. imports shrink, but U.S. exports will shrink as well.
Trump wants to use these tariffs as a revenue stream for the...
So what I also want to add to what I have to say is the question is, who is going to benefit from this situation? Okay, the person who really benefits from the increase of tariffs are actually big business owners and the government. So the government is able to control, to manipulate, to make sure how much they want to, sell, how much they need, how much they want to buy, and they can literally put pressure on different countries to let them know, look, we are the highest consuming nation in the world, and you want money, you want your economy to be better. We like your product. However, we want to play the game in this particular form. Okay, so you have to pay us more. You have to give us more. You have to do whatever we tell you. It's almost like playing chess. Okay, so that's number one. And number two, who also gains from it are investors, foreign investors. So think about it. So if you have a different goods, yeah, and you have to now impose now gain those goods from a different country, that means the person who has to pay more has to increase the price in his business. As he's increasing the price in the business, that means the business is making more revenue. So 9 times of 10, even if they're increasing the price, they're not going to increase the price like on a penny. That's not what they're doing. They're going to increase it at least maybe 10 or 20% more as usual. And with that extra 10, 20% means also an extra 10, 20% in their pockets, right? Because of everybody is now not have to increase the price, which means if you now start investing in certain businesses, the price for iPhone will go up, the price whatever, for shoes and all that stuff is going to go up. And that means now that all those things are going up, now imagine you investing in those companies. Now you can see that those companies actually making more money, and which means the overall consumer spending habits will go higher as well. That is now from the business standpoint. However, what can also happen for those who don't have enough money and they cannot afford it, there is another way of how Donald Trump has played the game in order for the US economy to grow, because the tariffs are there to create money. Once it creates money, those money will go into the debts they have to pay off, right? And that will is potentially 1.2% GDP growth. That means is growth for the economy itself. That means people are willing to invest into economy itself, and that means more investors will put in their money in, and things are growing. So, but in the long run, the overall benefiter, or the person who really benefits, are business owners, people who start a business, small businesses, and big businesses. These are the benefiter. But people who with low income or no income, they will struggle a lot. So what I will suggest to everybody is get a business going. It's time for the next 4 to 5 years to build on a business, and this is the time now where you can actually take advantage of actually having a business and saving taxes and etc etc etc. Why? I will explain to you, because of the big beautiful bill. So now let's just keep watching it for those who don't really understand, and then that will make sense, and that will also give us understanding of why we could buy the US economy, and also why things could also go sour, especially because of China. So this is we're just talking about the ideas. However, we will see if that is actually going to play out well or not.
The US to pay for tax cuts.
As tariffs on foreign countries go up, taxes on American workers and families come down.
Studies found his proposal would likely bring in around $250 billion per year, about 5% of what the federal government currently brings in with taxes. So if tariffs are harmful, always harmful even to the economy, why is Trump so focused on them? In the last 20 years, China has gotten aggressive, investing in manufacturing to become the world's largest exporter. Even today, they invest more than any other country. It has let them export things like steel and aluminum at below market values. That, coupled with numerous trade rule violations,
allowed President Trump to really restart the whole discussion about using tariffs to achieve certain objectives, such as punishing other countries, and the Biden administration has just continued that. So the whole environment has really changed from 20 years ago, when trade policy was pretty quiet business, and now we're talking about industrial policy, tariffs, subsidies, and all these different interventions because the whole global and geopolitical environment has changed quite dramatically.
And it would change even more dramatically with Trump's proposed tariff plan. In the short run, we know the economy will suffer. In the long run, no one really knows. Will it be a war between the US and the rest of the world, or the Western world against China? Trump wants to play a game of chicken to find out.
So as we just heard, she said, in the short run, the economy will suffer, and in the long run, it will be good for the economy. Why? Because investors will invest into the economy and money will grow. So it really depends on what is going to happen between all the with all the countries, and as well with China, to determine how the US economy will go. And then now that's where we are in terms of the tariffs. Okay, I believe. Yeah. So now we go to the big beautiful bill. Okay. So now let's talk about the big beautiful bill. The big beautiful, how Trump's mega bill transfers wealth in the US. Okay. So what is the basic bill of the math of the bill? So what is the basic math of the bill? How much does the bill cut in taxes? How much does it cut in spending? Okay. So the US tax, the House tax and spending cut page is clearly in a big bill in terms of the impact. We don't have all the final figure yet, because the Congressional Budget Office is still working on the analysis of the final version of the bill, which contained some significant last-minute changes. But CBO's initial estimate found that the package tax measured would increase the deficit by 3.3 trillion over the decade, while other provisions will cut nearly 1 trillion in federal support and Medicaid and food stamps over the period. All right. So basically, the food stamps and stuff will be cut. The medical support in some areas will be cut as well. And yeah, Medicaid, which provides health insurance to low-income Americans. Okay, that cuts tax. That money, that extra support of food stamp will go back to the government. That goes back to the government. So which means those with low income will actually suffer for that. So that's why I kept saying it is good for the Americans or for those who live in America to start a business, to get things going. Forget the government. Go and get something done. Get a business, or learn something about money. Yeah, get a business. So with the last cuts in package, with CBO project a nearly 700 billion reduction in federal spending, right? 700 billion reduction. Imagine, that's good money. 700 billion reduction. Miriam Food Stamp Firm, known as Supermarket Nutrition Assistance Program and SNS, would face 265 billion cut in federal support. Okay, how much does it add to the national debt? National debt is more than 37 trillion. How much would this bill add to that incredible figure? Overall, the bill would add 3.1 trillion to the national debt, okay, including interest over the next decade, according to an independent analysts. Blah, blah, blah. So this is what is happening. What people notice, these tax cuts is, yeah. So that's what is also important. Where does the money go from those cuts? Okay, higher income taxpayer would come out ahead with 60% of tax cuts going into the top 20% who have income of at least 217,000 next year. So that's what I said. So if you have a business, if you start a business, those tax incomes, you can keep them, right? You have extra income in your account. So it's a next year and more than third going to top 5. Those who earn 460 or more, according to the center. And then the following numbers show how the rich will get the biggest boost in their after-tax incomes compared to others. Those in the top 20 will see an average tax cut of 12,600 next year, increase the tax income by 3.4%, but gain that compared with current law. So obviously there's more money in the market. Okay, there's more money in the market. They have cut more money in the market, which means they have more money to spend. Okay, again, remember, there's more money to spend. Now, can you see the correlation between having the ability to spend more money and the tariffs coming into play, meaning more spending needs to happen anyways? So in actuality, how they have done it is like, okay, look, since things are coming into place, the tariffs are coming into place, and it seems that the economy has to pay more for whatever they want, right? Therefore, we need to help them in a way. And this is one way of how they're trying to add more money into the people's income, right? Especially, low business, middle class people, and the middle class, small business owner, and etc. But the low income, they're actually going to suffer. So if they're not going to start a business, if they're not going to make a particular amount of money, it's going to be very tough for them in order for them to actually live in a particular way how they want to live. Okay, right. So this is the tariff. This is the had something. Get tariff. Beautiful bill tariffs. Sorry guys. Had everything planned. I don't know why I got confused, but there was a video I wanted to show you, but it's not there. Is that the one? I think that was the one. Oh, there was a CNN something. Let me see if this. Sorry, guys, about this. Yeah, that's also So these are better off. Corporate America is better off. Manufacturer. What is this? So again, I think we have a little bit of a better number here, and of course, who's better off. We have manufacturers especially happy that the bill would make significant changes to how the U.S. tax code treats the construction of new manufacturing facilities, right? Business will be allowed to fully and immediately deduct the cost of building new manufacturing facilities. This temporary provision is retroactive to January 1925 and continues to construction that begins before January 2029. So a lot of construction businesses, you can see it properly. A lot of construction business will start happening. A lot of people who are into real estate and stuff like that. So you can see that tells you there's a lot of money gonna come in. A lot of investors will invest into real estate, into construction. Like definitely, we know like there will be a lot of money flowing, and that will also create job in regards to that. And so small business partnerships, the National Federation of Independent Business, the leading small business lobbying group, praised the legislation for making permanent especially conduct for the owners of certain pass-through entities who pay business taxes on their individual tax return. The deduction, which applies to small businesses and partnerships formed by lawyers, doctors, and investors, will get increased. Think about it. Lawyers, doctors, and investors will what? Get increased in the House version of the bill, 20% to 30%. So you can see investors, lawyers, so you can see there's certain groups that will make actually money with that, right? So that's why I keep saying, become a business owner or become an investor or get a law degree, get a doctor's degree, do something that the money you're earning will be get back into your account. Okay, so we have also
Listen, the president has argued that this will be one of the most successful pieces of legislation in American history. But like a lot of things, the ultimate beauty of this bill is very much in the eye of the beholder. But let me run you through some of the groups that could be better off. First of all, big business groups, the Chamber of Commerce, the Business Roundtable, they have cheered this legislation loudly because they're betting they're going to be benefiting from permanent business tax breaks in this legislation. Also, manufacturers are going to be able to fully and immediately deduct the cost of building new manufacturing facilities in the United States. Now, also, small businesses and partnerships formed by lawyers, doctors, investors, they should also benefit because there's going to be these permanent deductions for certain so-called pass-through entities. Look at the workers, tipped workers, they're going to be able to deduct up to $25,000 in tipped income through 2028. Overtime workers, they can deduct up to $12,500 of their overtime pay. One of the biggest winners here, though, are high-income Americans. The top 20% of earners, their net income could go up by $13,000 per year. That's according to the Penn Wharton budget model. And look at this, the top 0.1%, they're really coming out ahead. Their yearly net income could go up by almost $300,000. Another key here for high-income Americans is that this legislation is going to allow people who live in those high-tax states and make up to $500,000 a year, they're going to be able to have this temporary deduction limit increase to $40,000 per year for the next 5 years. But of course, there are some groups, some business groups, some workers who are going to be worse off because of the changes in this legislation. Let's start with lower income Americans. As you noted, there's some significant cuts to the social safety net. We're talking about new and expanded work requirements for Medicaid and food stamps. And so some observers do believe that the take-home pay of lower income Americans could actually go down because of this legislation. Also, hospitals, they could be hurt by the fact that there's this reduced Medicaid funding from states. Got to look at what's happening in the clean energy industry as well, because this legislation calls for reduced incentives for renewable energy projects like wind and solar, also stricter requirements to get some of those incentives. And when you think about some of the opposition from Elon Musk, electric vehicles, they're certainly coming out as worse off because this legislation ends tax credits in September, that those tax credits had not been scheduled to expire until 2032. I think another loser here are those deficit hawks, because the Congressional Budget Office estimates that this package is going to increase the deficit by $3.4 trillion. And we know the United States already has a deficit problem. There's this mountain of debt. Look at this. This shows U.S. debt over time as a share of GDP. And what really stands out here with this figure above 150% is we're well ahead of the World War II level era of debt as a percentage of GDP. It started to go up during the 2007, 2009 great financial crisis. Of course, there's a lot of spending to bail out banks and provide stimulus checks. It went even higher during COVID. Again, that was a once-in-a-century pandemic. But look, it just has continued to go higher and higher, even though we are in an environment of low unemployment and thankfully no health crisis right now. We are continuing to see the budget come under enormous pressure because of all of this spending out of Washington. So look, when you put it all together, there are obviously some people that are going to come out ahead, some who are going to be worse off. But I do think the big winners here are those high income earners and also big businesses.
All right, so that's what we see. And this is the situation. So for us to understand the whole concept of everything what we're doing, we need to definitely have a look, and this is what I was trying to do, to give us understanding, okay? Not just to keep marveling and just talking and not knowing what I'm talking about. It's just all about understanding what is American doing and how can we take advantage of it, okay? So now if you think about it, this is the big, a little bit of a write-up of the big, beautiful bill. What we see is that the idea of what Donald Trump wants to do, you can see who will make American families and workers thrive again. So you can see there's this idea of helping them to thrive, okay? And one of the areas where we can see where it's like no tax on tips, no tax on overtime, right? Enhanced deduction for seniors, no tax on car loan interest. So you can see there is certain opportunities for low-income or for other people in America to, withhold tax, and maybe even, for instance, that no tax on tips is good. It's maybe that I didn't know that they needed to pay tax on their tips, and that will help them, right? So, there's some opportunities there of what they're trying to achieve, okay? And if I go back to what I wrote down, so one of the areas where they want to help them is prevention of tax hikes on American families and workers, as well as tax relief, investing in health of American families and workers, make rural America and Main Street growth again, also tax relief, removing taxpayer benefits from illegal immigrants, and then preventing fraud, waste, and abuse, increase in debt limit. So, and then that is literally what they're trying to do with the Americans. So if you put all things together, you can see there's a potential there that the economy could grow, right? And there are some partners that have to play along to make it happen, which will be the European people and economy in terms of the tariffs, and the China. Okay. Now, with that said, what is the market sentiment saying in regards to all those things? So now, if we go back here, if you go back here and then start maybe listening from there. Sorry, and let's see what happened.
Might have to cut hiring. They might have to cut returns.
On what happens to a 1 or a 10% tariff over time? And well, I'll let her speak.
Okay, Erica, welcome, and let me just set you up with a couple of the questions that I've gotten from viewers and from the audience. Barb's asking, my question is, how are the tariffs going to affect families? My daughter is a working mom of 3, ages 15, 12, and 9. Another person asks, who do you think will pay for the tariff increases? They're talking about automobiles, but consumer or manufacturers? Will manufacturers eat those increases? So, I mean, to the extent that you can, try to field all of these and bring it together for us.
Yeah, so the tariffs will create a tax burden on the U.S. economy, and it will be shared by workers and by business owners. Some companies may be able to pass their tariff costs on to retail prices. Others won't. They'll have to eat that cost. It reduces their revenues, their profits, which means they might have to cut hiring. They might have to cut returns to shareholders. So in either way, whether the cost is passed forward or passed backward, it's American workers and American business owners who bear that burden. We've estimated that the revenue raised by these tariffs in 2025, if they're all left in place, will be about $290 billion. That's a lot lower than what you might hear elsewhere. That's because when we put a tax on imports, imports fall. If you think imports are going to stay the same, you're out of step with the economic literature. We also know that when tariff payments rise, other tax revenues fall. Tariffs, like I mentioned, pull income out of the economy before it's actually sent to workers or to shareholders. So it shrinks the bases of the income tax and the payroll tax, cutting off some of the direct tariff revenue. That's what gets us down to that $290 billion. And on average, that amounts to a tax increase of more than $2,100 per U.S. household, or a reduction in after-tax income of more than 2%. It hits lower income households and middle income households, so working class people, harder than it does wealthier people, because lower income households consume more of their income than the wealthy do. So this is a regressive tax increase. Even if it's used to partially offset something like, let's say, the Tax Cuts and Jobs Act extension, about the bottom 80% of taxpayers are worse off under that trade, because the tariffs are a larger tax hike on them than the tax cuts will provide a benefit.
All right. So now this is based on tariffs, okay? This is what we now know. What she said in regards to tariffs, that was before the big beautiful bill came out. So now if you go back to the big beautiful bill, she was talking about taxes and etc. But you can see that they're actually trying to reduce the taxes the American people have to pay. So what does it mean for the economy? It just means there is a potential upside potential, right? And there's a potential opportunity for people to make money with the economy. All right. So if that means the borrowing, like for money borrowing, what American borrow will be cheaper, and once it becomes cheaper, that means probably they're going to borrow more, and then probably it will help the economy in some way or some form, which technically it shouldn't. They're supposed to try to pay everything off. But before we go into the market sentiment of what other people's thinking in general, let's quickly just go through the markets, because I've been talking a lot. And yeah, so basically, if you look at this one, we can see this is the DAX, DXY, that represents the US economy in general, where we think the US economy is heading. Right. I wanted to make it bigger. It's not over here. Anyways, I thought it was what it was. So anyways, so that's the situation. Oh yeah, that's what I was looking for. So yeah, here. So we have that's what we are with the economy. All right. So now in 9 days time, or on the 9th of July, Trump is going to send out the letters. So now we can anticipate that the market is just going to be very volatile. It's going to go upside, downside, and on the 9th of July, with those countries he hasn't really made any deals with, they will respond. People will talk. President Xi is going to say something. China is going to say something. other people was going to say something, and we will see how things will play out for the next week, for the next 1 or 2 weeks. I don't know how quickly those negotiations are done, and I also don't know how quickly people are going to be responding, but we will know what will happen. And whatever the outcome is, as for now, there's definitely a lot of uncertainty to the US economy. So now once the big beautiful bills, the legislation has been passed, there's a lot of fear happening regarding that. So therefore, for the next few weeks or months, maybe the economy is going down. Then we also have the tariffs needs to be set in place. It's going to be set in place, and that also determines how China and etc. is actually going to be reacting, what's going to happen, and that will also determine if the economy is going to go likely to go up and down. But right now, from the investor standpoint, a lot of fear is there. So for now, and we know based on what has been said that definitely for the next maybe few weeks, few months, it's definitely going to keep going to the downside. So right now, if you look at the whole market structure itself on a monthly, we can see we clearly on a down move. Okay, we clearly down. Anything can happen at this point. Maybe we're gonna go up, but I'm expecting probably a retest at structure and then keep going to the downside for the next maybe 1 or 2 weeks. Yeah, maybe bump like this, or a continuation, technically just to continue just go down, right? That's what I'm expecting with the market to happen. And when that happens, then we know what to do and what not to do, and we know we can take advantage of the market. So if this actually gonna happen, so what we definitely gonna see probably to gold and Bitcoin. So based on our observation, gold is gonna keep going to the upside, probably. All right, that's what we're gonna expect, a continuation to the upside on gold, even though we see a potential down to the economy, but a little bit upside with gold, and then probably we're gonna sell off once the economy is gonna get stronger. Stronger is gonna sell off. Then we have Bitcoin. Like I keep saying Bitcoin seems like to become a safe haven. So if there is a lot of fear and uncertainty keep going, I'd see Bitcoin keep going maybe to 120 or whatever. Just keep growing, because ultimately Bitcoin is definitely a retail market approach, depending on how the people feel about Bitcoin. If they believe Bitcoin is the next place to save the money in safe haven, we're gonna see definitely an upside for gold. The price of probably of oil will also go up, probably, will go up as well, due to the tariffs and etc. etc. So I'm also expecting a continuation to the upside a little bit, because of uncertainty. And yeah, so these are what I'm expecting. And then what I'm going to trade is what we're gonna have a look for later. So these are my short market predictions, and let's continue with the situation. So we are here. This is like a person. We want to know market sentiment. That's not actually how you really find out market sentiment. You go and then just write down market sentiment, and you have an idea of what people think about the market. But for me to know what other people might think about what happened is also important for me to form a bias regarding the market.
Oh, Mr. Paul, great to have you on Uncensored.
Good to be with you.
We used to speak a lot in my old CNN days, so it's great to have you here on YouTube. Let me just read a quote that you said recently. Government's too big, they print too much money, and they create the problems they pretend that they're fixing. That was actually, I think, your overview of where we are with this. So I presume you do not agree with Donald Trump that his bill is a big, beautiful bill. You presumably think it's the opposite.
Oh, well, it isn't hard. I did encourage some of the things he was talking about along with Musk at the beginning, because they have called attention to some really ridiculous spending like USAID. But overall, it's once again the same old stuff. Promises, but no serious intent to follow through, because all that calls out all the special interests. And that's the nature of our system. I see that as a consequence of pure democracy. Democracy means you can gang up on the minority and make the minority pay for all this. And I think that's what happened. There's a lot of gangs out there. It isn't one group wanting to change it and add on to it. You put them all together, then you have the dictatorship of the majority, and our country's getting poorer by the day, and we no longer can afford it. And that's why this is getting more and more difficult. And even if they come up with another vote, it's not going to last. And how are they going to pay for it? They might say, well, it's been suggested that the national debt's going to increase by $5 trillion. Well, someday you have to deal with it. But I think we're already, people used to say, and I would say it too, you're just passing it on to the kids. No, the kids of today, they're the ones who are already suffering. The lower middle income class, they start to pay the bills. That's the tax, the inflation tax. So it's the payment is here already, and you don't have to wait. It's just going to get a lot worse, which is going to incentivize those who want to resort to violence.
Elon Musk was clearly, joined at the hip with Trump in the run-up to the election and for a few months afterwards. He has come out and attacked this bill in pretty savage fashion. He thinks it's going to add trillions of dollars to the American debt, which is already, in his eyes, unsustainable. It may lead to America going bankrupt. Trump, in return, says that he believes what it will do is stimulate the economy and that there will be economic growth. And therefore, all the apocalyptic warnings about the increase to the debt will be overtaken and consumed by the growth. What do you say to that argument?
Well, it's been around for a long time. It never really pays the bills. It might work here and there when you cut taxes and then they go, there's more people working and there's more tax income. But overall, it does not solve the problem. Even the first person to really try this, they got a lot of credit for it. It wasn't magic, even though it did have a long time to exist. And that was the Kennedy taxes. And he says, we'll pay for it. We're going to stimulate the economy. And it may work for a month or two or a year, but it's not the answer to the damage done by the spending of money, because they never cut spending. And the deficit, just look at those curves, exponential. It used to be a slight curve to it. Now it's a straight line. And that means that they have no control whatsoever. All they have is control of more deception, because they have to continue to fool the people to go along with this. And I think the conditions are so bad that eventually it overwhelms. There were bits and number of people who resented the COVID epidemic and the ridiculousness of that. And yet there was just a few put the doctors in jail and a few others for speaking the truth. And then eventually more and more people started to realize it. Now people are realizing a lot of people died because the government became the doctor, and they made a lot of mistakes. And that's the way it is with tax cuts and things like that. It's tinkering, it's mismanagement, it's central economic planning. And they can talk individual groups into it. Well, we'll give you this. So the people that held out the longest wanted their item. It might have only been for their state. And I think that's
what I like about what he said. It's not Donald Trump's fault. It is a combination of the whole economy and of the politician, of what they have done over the years, like Trump, Clinton, Bush, Obama, and so on and so forth. So we can see that the debt they're having is 37 trillion. So it's 37 trillion. Not even, there's no American president who can actually erase that debt. It's just impossible. So now what we know, and what he is also emphasizing, is that whatever they're planning to do, we have to be alert and be ready for what is happening. So stop relying on the government and take your own life in your own hands and trying to do what you can do to come out of the situation you are in. All right. Right now, what Donald Trump is doing is giving big businesses, small businesses, and investors the opportunity to make money at that market right now. Right. He's given investors especially opportunities to make money. So if the dollar is collapsing, we can buy gold. If dollar is also collapsing, we can buy Bitcoin. If the whatever is still collapsing, there is still we still have copper, we still have silver, we still have platinum, we still have natural resources which we can buy in order for us to make an extra income as investors. Now, what are the opportunities for big business and other businesses? Is definitely the taxes for the next 4 years, and so take advantage, start a business, start a company, go into manufacturing or whatever, do whatever, right? So there's a lot of things happening, and yeah, so that's it.
Result of a misunderstanding of democracy. You might have a Democratic vote to pick a leader, but you don't have pure democracy if 51% says screw the poor people in the middle class, just print the money. They won't know what's going on. And then when the prices go up, wage and price controls, and we'll blame corporate profits. The thing goes on, and it's a bipartisan agreement to go after this, because neither party right now could do what is the right thing to do, and that is cut spending. It's not going to happen, but the liquidation of all this malinvestment and all this debt will occur, because we're in the middle of it getting started, and that is debt is being liquidated by paying it off with cheap money. People say, well, let's get a mortgage now and we'll pay it off this kind of money. And that's what the government likes, the inflation, because they can just print the money, and the real debt in a way goes down when they do that, but it caused economic chaos, a lot of anger. I think the biggest threat is the breakout of violence, because the wealth distribution becomes so unfair. And that people should be concerned about. But they come up with it and say, well, you're right. That's capitalism is terrible. What you need is socialism. We'll do a much better job of distributing the wealth. See, that's the consequence, and that's coming out of our educational system. So if we don't reverse that, and more people understand the value, the moral and the economic and the value of having a free society and letting people make their own minds. It's science. They say that's daydreaming. Yes, it's also daydreaming, but it's also the best way if you're looking for peace and prosperity.
President Trump has had a number of political wins in the last 2 weeks. That's undeniable, whether people agree with him or not. He's had wins. Where do you find agreement with him? I mean, for example, you don't believe in foreign wars. Trump doesn't believe in waging foreign wars. He's pretty well solved the problem of the seemingly unsolvable southern border crisis. The numbers of people coming in illegally on the southern border have dwindled to almost nothing under Trump in just a few months. Are these things where you can see common ground with Trump?
All right, amazing. So that's all my analysis. So to recap, what I think is going to happen in the long run, so Trump is trying to make money. That traffic or tariff brings money into. Apparently, it's creating jobs, it's bringing money. Big Beautiful puts money into big businesses, middle class and small business owners, self-employed people, which means more foreign investment will come into the country. That's what I believe. So investors will make the majority of the money. Also, tariffs forces people to spend more money in the overall economy, which is bad news, and that means people have to do more spending. All right, so that is what I'm thinking. So now let's go to the chart and let's see what happened last week. Okay, we found some few fantastic charts, fantastic trades, which was on Monday there. So the idea on Monday, this is USD CHF. The idea was literally to go to the upside, to retest at this area of structure, and then to continue selling, which didn't happen. I found an opportunity at this area and was able to take, and there was 8% with that trade. If you go to the 1 hour, go back, there was an opportunity I thought will be good long, but it was not, so it was a loss for me. However, there was an opportunity here which came along around 1 p.m. Okay, 1 p.m. That was on a Monday. Okay, Monday 1 p.m. was a good opportunity there, retested, and then went all the way down, which is an 8% gain on USD CHF. Then we had another potential trade happening here, which was Euro AUD. Okay, you can see that I have a trade here to this area, which was the support area. I was expecting to keep going to the long side, and that one gave me okay, that's a 2%. This was give me 2% as well, and that's what my target was. Literally 177,649. That was my target. Overall, the first trade gave me 4%. To be fair, if I'm honest, I came out here, that was 3%, and that one also 3%, that's 6%, and that's one 678. So in overall, it's also an 8% trade. I was expected to keep going to the downside, which didn't happen as Euro AUD. I went to the downside, USD Chef. Then we had on Monday JPY. Yeah, that was Tuesday. That was Tuesday. Literally fantastic entry at this area. Went all the way to the upside and tried to hold it. I think I closed it earlier anyways. I closed it around here. It was a 2%. And this one also as well closed it here. 2%. Okay, so on this one was a loss. All right, so you can see that if you know what you're doing, you can always take a good advantage of the opportunities, what the market is presenting. And this is so far where we are. Then AUD CHF. Okay, I didn't like the trade at all. I think Monday, that was Friday. Monday, I saw an opportunity on Monday. I was able to sell, was able to make a little bit of money, and it came out here. You can see that as well. So it took me out at this area. I wanted to keep selling to the downside. Here, so it came out here, about 3%, and then here as well. So that was 1.6%. All right. So why do I keep selling? Because it just looks for me like a sell opportunity, sell market, and that was last week. What else was I doing? Yeah, that's it. These are the only trades I had so far. So what do we expect for the week? I haven't really analyzed the charts yet. We're going to do that together. We're going to see for opportunity. We can see it's definitely growing. Maybe again, my bias for gold is still long, always long. Maybe we can see a change of structure here, because might be going to the downside and go to the upside, because at the moment there's definitely a lot of uncertainty. So because of those uncertainties with the tariffs and the big beautiful bill, and how people responding and how investors going to respond into it in the short run, people is definitely going to take money out. In the long run, probably people are going to put money in, and depending in the next few days, like I said earlier, and that will really determine what we're going to do with the market. So with the AUD JPY, we broke structure. That's where we are. We broke particular area of structure. Yes, I will continuously possibly look for buys. So my target will be 1.82693. Euro. Yeah, that's the one I believe. Yeah. So just take all the colors. Yeah, that's the one. Euro AUD, I will keep buying. You can see I bought here as well and went all the way up. And then we'll just keep buying. So what will be waiting is also broke structure here. Okay, there's a rejection here. So what I'm expecting, I'll keep buying. What I'm expecting would be a potential retest to which area? Probably could be retesting at this area. So it will be literally at this area, previous structure, and go to the long. That's what I'm waiting for. If not, retesting somewhere here. So if we now take the fib, if we now would take the fib level, where else could be a potential retest happening? If I do the fib is not going now. going on with the fib? The fib, there it is. So the fib level size for noise point. So we can see it definitely a structure this area, or it could go a little bit deeper into the 78.6 level or 61.8 level. If it's come to a 78.6 and we see an opportunity, that would be beautiful, because that will be from here. It will be a long move. Bam, 1%. That will be 6%, 7%, 8% move if it's going to that area, or 4%, depending on where you're actually going to place your stop loss. That's up to you. Remember, this is the 4-hour structure point. Now, based on the 4-hour, what I'm expecting, to be fair, would be a test at this area, and then probably retesting from this area. We're still going to be a 6% move. That's just what I'm expecting. So that's what I'm thinking what is going to happen. That's AUD. We're placing an alert here, and the alert will tell us retest, retest, boom, and then we now know what to do. It's not that fancy. Then we have an opportunity potentially with gold. Gold was also a beautiful trade. I didn't even mention gold. Sorry about that, guys. So gold from Monday. Okay, Monday we found like a beautiful opportunity with gold on Monday. We saw the structure. I also kept saying that we'd probably go to the upside. However, I came, retested. It took me out first. I lost there. Found an opportunity here, and then decided to go right all the way to the upside. And that was a beautiful 12%. Then found another opportunity here with 7%, and then there's another opportunity with 3.5%. Okay, then it was a sell-off. Also there, well, that was last week's, right? No, it was this week. Wow, it was a lot of opportunities. But this one, I didn't really take advantage of that. And that one was also 5% move. And then this one was also a beautiful move, which I also didn't take advantage of because of I was a bit impatient. So on that trade, I was very impatient. I didn't really take advantage of. I did mark the ideas I had. I didn't really take advantage of that trade, but there was a beautiful 4% on that move. And so you can see I was trying to find another opportunity here, right? But that took me out. So that was an L for me on this area. So I wasn't, like I said, because I saw this move, it really bit me, and I was hoping to find another opportunity there, but it didn't happen. So that's what is with gold, and what I'm expecting a continuation to the upside potentially, because we are actually bullish. We have seen a retest. So basically, this is now the weekly candle, right? So last week indicated a strong sell-off. We want to see this one once sell-off. It gave us a strong 70% move to the upside. Now it's retesting the 50% level, and it's going to the upside. Okay, it's not going to the downside. That was last week. Now, if I check of what happened so far in the market, we can see there was a break of structure. If we break this area here in the 31 at 3,197.547, if that breaks, then it would indicate to us we continuously going to be selling. But as long as it didn't happen, I was not looking for sales. I was definitely going to look in for buy on the weekly. Now on the daily, however, we do see a structure shift. There's a head and shoulder structure here, indicating a potential to the sell opportunity. So as long as anywhere in between here, somewhere here, we can expect as a buy to take place for the long run. Okay, we can always expect a buy to take place. So now my first indication, I know I want to buy. Okay, I know I want to buy. However, based on how the structure looks like right now, I'm not looking for buys. I would look for sells. Okay, and as I'm looking for sells, I'm still aware that it could come to this level and then go here and then go to neckline. All right, that's an opportunity. It will go all the way here to or maybe here. can adjust it. I would, yeah, maybe here, this area, all right, would be the 3,271 level. Yeah, can break to the downside here and then go all the way to the upside, right? Or what we're gonna do is, yeah, if there's another opportunity coming, we have to wait for a break of structure this area, and we wait. Once it breaks this area here, we're gonna go to the upside. Okay, so these are what I'm expecting. Either come here to this area neckline and it keeps going to the upside, or it's gonna keep going further to the downside somewhere here and then go to the upside. So it is just depending on how we trade and what we're looking for and how we place our positions. Okay, that's is in regards to gold. We go look for long, then we have this AUD long. I don't know if there's a good trade. Let me see if the other pairs have a better look on structure. GPJPY. Let me see, guys. Okay, GPJPY. Okay. Let me see, GPJPY. All right, so far GPJPY looks like a buy, all right, buying opportunity, because everything indicates to buy. However, there's certain things happening here. Okay, here we're on a weekly structure point. So we have to break, literally see a break and retest to continuously looking for a buy. However, I do also see a rejection at the trend line. So I see there's a rejection, has rejected the trend line 1, confluence 1, from the hammer. So now that could either indicating a reversal, meaning going to the downside. So it will be from here, right, and go to the upside, right? Or what we're going to see is a break here, and then go to the upside. So now, how does it look on a daily? Yeah, so based on the candlestick formation and what happened so far, okay, my bias is definitely long. So I will go long first. Okay, my first bias is long. My second bias would be sell, right? But my first bias is long. So as long as my first bias is long, yeah, my first bias is long. Bum, bum, bum. Yeah, so we can see that's a rejection, has a retest on daily structure. So yeah, so for me to go long with that one, there's a potential it could go, all the way to the downside, and then from downside it goes to the upside. So where would be the market potentially going? A potential move what I was looking for would be this area. Yeah, hold on, let me just quickly. Yeah, so we're still on the daily, to be honest. So that would be a good danger zone. Or let me just mark it with a different color. Let me use this color. So that will be a good zone. That's how I call my danger zone, where price potentially can come to and go to the upside, right? But the most responsible trade would be actually go here. Yeah, so the most responsible trade, if you really don't want to get it wrong in terms of going long, you have to wait, literally you have to wait off structure, which would be this area, and then go long. So for me, GPJPY is also long, and then yeah, that's it. So yeah, that's it. So these are my 3 pairs so far. It's gold, GPJPY, Euro AUD, and GPJPY. If anything changes, we're gonna see the changes on Wednesday or whatever, or another day. And yeah, so I hope you guys liked it. I hope it was a good session. I was trying to do a little bit extra. That's not really my style, but these are my technical analysis. And yeah, so I hope it was helping, and yeah, hope to see you soon. Bye bye.